How's it going, everyone? It's Sam. Today we're talking about XPENG, and I've never talked about them before, but they had a really good Q3 earnings report today, and it sent the stock up dramatically. So I'm going to go through what they did for Q3. I'm going to compare them to NIO a little bit because they do work in the same market. And I'm going to talk to you about one risk factor that I do see with these companies. So if you guys like this, please leave a thumbs up. I really appreciate it. Also, if you want some free stocks, you can check out the link down below to WeBull, deposit $100, and you can get some free stocks. So you can get three, some of them worth up to $1,600. I got a $140 stock the other day. Also, if you want to try out M1 Finance, there's a link down there below. Also, they are the company that I hold the most amount of money with. So XPeng is up 18% today, and it's just gone insane off of their Q3 earnings. Now, this has also caused NIO to go up. It's also caused Workhorse to go up. It's caused a lot of different companies to go up. But I want to go through exactly what's happening with the company and why I think that XPeng might be a very good addition to an EV portfolio. So I do not currently hold them, but I'm definitely looking at them. I'm not sure I want to buy them when they're up 18% today, but with these EVs, you never know if they're going to come back down. So let's take a look at what they reported today. So they just destroyed their third quarter report. You can see that they had deliveries reach about 8,578, which is an increase of about 265% from the third quarter this year compared to last year. It's even a 166% increase over the second quarter. They also had their supercharging stations expand to about 135 locations. Their total revenue was about $293 million for the third quarter, representing an increase of about 340% over 2019. Now, overall, the revenues from vehicle sales were about $280 million, so a pretty good amount. Their gross margin, which is really important, was about 4.6% compared to negative 10% for 2019 and even negative 2.7% for Q2 of 2020. Their vehicle margin, which is one of the most important numbers, you need to have good vehicle margin to actually be able to make money as you scale, that increased to about 3.2% compared to negative 10.8% in 2019 and negative 5.6% in Q2 of 2020. Now, they are not close to something like Tesla, which is up in the 20s, but this is a good step in the right direction. Their net loss was $169 million for Q3. So they did have a loss, but they are just scaling. They're expanding a lot, and they have a huge increase in revenue, which is the important thing. Now, when you look at XPeng versus something like NIO, the market cap is about $29 billion compared to about $63 billion for NIO. Now, what does this mean? Well, it's a lot cheaper, first of all. Based on Q2 results for NIO, because we don't have Q3 yet, they have a revenue of about $2 billion or so if you just take it and then multiply it by 4, which I think it will keep on increasing. But they have a revenue of about $2 billion. Now, compared to their market cap, that gives them a price to sales ratio in the low 30s compared to XPeng, where they have a market cap of about $29 billion with about $1.2 billion in revenue, which gives them a price to sales of about 24. Now, this is a pretty high number, honestly, compared to a lot of other companies. I believe Tesla is sitting around 14 or 15, but these are much younger companies. They have a lot more growth ahead of them. And XPeng is a really interesting company because they actually do all their manufacturing in-house in their manufacturing facility. It's a smart facility, as opposed to NIO, which actually farms it out. They don't do it themselves. But I will say this article came out yesterday, and this is something that I think you should consider. First of all, the new energy vehicle sales surged 105% to 160,000 for the fourth consecutive month of gains in China. So this has increased a lot month over month, and this has outpaced China sales, which saw about 12.5% gain. So this is a large portion of their sales now. You can see about 160,000 out of about 2.57 million. So this continues to be a bigger and bigger driver in China. Now, of course, both of these companies are looking at branching out eventually, but right now they are focused in China. But there is something that's important to see in here, which is that the Chinese demand is far below production capacity. The reason they say this is Tesla's Shanghai factory produced about 22,000 vehicles, and they only sold about 12,000 of these vehicles in China in October. So they actually sent these vehicles out and sent about 10,000 made in China Model 3s to other countries. Now, I should say these are all Model 3 sedans. I don't know if I said that, but this is something that I would consider, that a lot of these companies are vying for the same user base, they're vying for the same sales. So if they continue to increase production, the amount of demand might not be able to keep up with the supply. So that is something to consider. Of course, they can slow down a little bit. They can expand to other countries instead. But this is something that I would take into consideration when I'm investing really heavily into all these EV stocks, especially the ones that are in China. Now, I think that these companies could run up further. Again, they have a lot of growth. I mean, you're talking about 100 to 200% growth year over year in revenue. So this is something that is very attractive. So I am looking at buying these companies like XPENG. I do own some shares of NIO. The majority of my EV money, though, is in Workhorse and in Tesla. So actually, Workhorse is up pretty drastically today too, which is nice to see. But I am cautious going forward, investing too much in these companies, just because there is going to be a little bit of a curve with charging stations and with consumers just buying these vehicles. And just a little update, I was editing this video and then I looked back and XPeng has gone up almost 25% now. And NIO is also up 10%. You know, just looking over the 1 year, NIO is up about 2,200%. And XPENG is up pretty drastically too. When you consider just a couple months ago, it was about $19 a share, and now it's up over 134%. You know, I would be a little bit cautious just because if you are thinking this is a short-term play, it could pull back because it has been up so much. If there's some kind of pullback in the EV space, I would be cautious about trying to get in and get out short-term because it is up so drastically. Both of these are up so drastically in the last year, in the last couple months, that I think you have to look long-term with these companies, and I'm not sure I hit on that enough earlier in the video. Thank you for hitting the like button and checking out WeBull and M1 Finance below. Now, I did cover another stock that has very high growth, and it's actually a REIT. Not too many people watched it, but this REIT has had revenue numbers that have increased drastically, and I actually have 100% plus return in this company so far. It actually works in the MJ space, so I have to be careful what I say. But if you want to see that video, check it out here. I think that it has a very good potential for the future, and it pays a very nice dividend. Thank you guys so much. I appreciate it, and I'll see you right here.